Welcome to SS2 Accounting. Today we study the income statement and statement of financial position for companies under IFRS, International Financial Reporting Standards. These are the most important financial statements for any business. At the company level, they follow specific formats that differ from those used by sole traders and partnerships. Financial statements communicate the financial performance and position of a company to stakeholders. Shareholders want to know profit and return on investment. Lenders, banks, debenture holders want to know ability to repay debt. Tax authorities want to calculate tax due. Employees want to know company stability. Government, for regulatory and statistical purposes. Public/investors, for investment decisions. Under IFRS, the income statement for a limited company shows. On screen. Income statement for year ended December 31st, 20XX. Nigerian Naira 000. Revenue, turnover/sales, XXX. Less, cost of goods sold, XXX. Gross profit, XXX. Other income, if any, XX. Less operating expenses. Distribution cost, XX. Administrative expenses, XX. Operating profit, EBIT, XX. Finance cost, debenture interest, bank charges, XX. Profit before tax, XX. Corporation tax, XX. Profit for the year, after tax, 20. Appropriation, sometimes separate in older format. Preference dividend, XX. Ordinary dividend, interim, XX. Final proposed, XX. Transfer to general reserve, XX. Retained profit for the year, XX. Key items specific to company income statements. 1. Corporation tax. Companies pay company income tax on their profits. In Nigeria, the rate is 30% for large companies. Tax is an expense, below operating profit. 2. Debenture interest, expense before tax, appears in finance cost section. 3. Preference dividend, appropriation, appears in appropriation section, fixed amount based on preference share rate times nominal value. 4. Ordinary dividend, appropriation, directors recommend interim dividend, paid during the year, and propose final dividend, at year end, subject to shareholder approval at AGM. 5. Transfer to reserves, profit retained in business, general reserve, dividend equalization reserve. 6. Retained profit, profit carried forward to next year, increases retained earnings on balance sheet. The Statement of Financial Position, SFP, for a company under IFRS. On screen. Statement of Financial Position as at December 31st, 20XX. Nigerian Naira 000. Non-current assets. Property, plant and equipment, PPE, XXX. Intangible assets, goodwill, patents, XX. Long-term investments, XX. Total non-current assets, XXX. Current assets. Inventories, stock, XX. Trade receivables, debtors, XX. Cash and cash equivalents, XX. Total current assets, XXX. Total assets, XXX. Equity and reserves. Ordinary share capital, XXX. Preference share capital, XX. Share premium account, XX. General reserve, XX. Retained earnings, revenue reserve, XX. Total equity, XXX. Non-current liabilities. 10% debentures, XXX. Long-term loans, XX. Current liabilities. Trade payables, creditors, XX. Accrued expenses, XX. Corporation tax payable, XX. Proposed dividend, XX. Bank overdraft, XX. Total current liabilities, XXX. Total equity and liabilities, XXX. Total assets must always equal total equity and liabilities. This is the accounting equation: assets equals equity plus liabilities. Types of reserves. Capital reserves arise from capital transactions, cannot be distributed as dividends. Share premium account. Capital redemption reserve. Revaluation reserve. Revenue reserves arise from trading profits, can be distributed as dividends. General reserve, profit deliberately transferred from income statement. Retained earnings, profit and loss account, accumulated undistributed profit. Dividend equalization reserve, or to smooth dividend payments over time. Brief worked example. On screen. Olaranfimi Ltd, profit before tax 500,000 Nigerian nairas, tax 150,000 Nigerian nairas, preference dividend 20,000 Nigerian nairas, ordinary dividend 100,000 Nigerian nairas, transfer to general reserve 80,000 Nigerian nairas. Income statement, bottom section. Profit after tax equals 500,000, 150,000 equals 350,000 Nigerian nairas. Less, pref dividend, 20,000. Less, ordinary dividend, or 100,000. Less, transfer to reserve, 80,000. Retained profit equals 150,000 Nigerian nairas. This 150,000 Nigerian nairas increases the retained earnings in equity section of balance sheet. Summary of income statement and statement of financial position. Income statement order: revenue, gross profit, operating profit, profit before tax, deduct debenture interest, profit after tax, then appropriations. Corporation tax, expense, 30% Nigeria for large companies. Debenture interest, expense, finance cost, not appropriation. Dividends, preference and ordinary appropriations, below profit after tax. Capital reserves, share premium, revaluation reserve, cannot be distributed. Revenue reserves, retained earnings, general reserve, can be distributed. Accounting equation: assets equals equity, share capital plus reserves, plus liabilities.